Hello, welcome to another episode of Executive Suite. We're here today with Omar Kabir from Dragonfruit Ventures, and we're here to talk about all things AI. Dragonfruit Ventures is a venture fund, early stage fund that invests in AI companies. Um, so, Omar, can you give us a brief description of your fund, how long you've been around, what kind of activity you've done so far, and then we'll take it from there.
Yeah, happy to. And Thomas, thank you for having me today. So I'll give you a quick bit of background on the fund. We're a new fund based out of Toronto. We target early stage companies, so think pre-seed seed. We like to be oftentimes the first or second check into any given company. We invest in AI companies, but we prefer two specific verticals. So we like the consumer tech sector, and we like what we like to call the future of work, and happy to tell you more about that. We began about 5 months ago. It's been in the works for a while, but we opened the doors to writing checks about 5 months ago. We've written one check so far into a company called Outrove. They are a future of work company in the sales and marketing and go-to-market space, and happy to elaborate more. But recently got a big markup on that, and so progress has been good. But happy to take this wherever you'd like.
Yeah, okay. Well, why don't we just start with that first investment that you made? Um, how long did it take you from the time you contacted them, or did they contact you, to the point where they actually got some money?
Yeah, so this was a bit of a unique one. Things move quite quickly in VC. You could write a check within a week, but a good friend of ours in San Francisco, who was part of the Y Combinator Accelerator program, he got in touch with a founder um, who was couch surfing at the time, Egyptian born and raised, go to SF to basically network with people. Ended up on this guy's couch, who then put him in touch with us. We had a call with him. He was building out a tool in the go-to-market and marketing space for large like Fortune companies. We had a great chat with him. I could tell this founder had something slightly different. At the age of 17, he had already built a $3 million ARR business. His co-founder at 15 was building robots for the United Nations. And so we thought, we have somehow landed upon, two rather exceptional guys. And so we very quickly made an internal decision that we would give them money. Now, between making that decision to actually doing our diligence and deploying our check was about a 2 week process. And so going deeper into the product, into the market, doing our background check on them, talking to people they had worked with in the past, and then gaining conviction in what they were building and how large it could become was about a 2 week process, by which then we wired the money at an $8 million valuation. And then they recently got marked up to about a $30 million valuation. So an immediate close to 4 times multiple within a span of about 2 months.
Okay, so that's fantastic. Now, for people who might not know, Y Combinator is it's kind of, would you call it an incubator? What is it? It's kind of like a startup club or something like that, that if you get accepted into, you get mentored and they hook you up with some Silicon Valley people who have had some success, and they mentor you, and then they does Y Combinator actually have their own money, or do they just introduce you to VCs?
Yeah. Yeah. So they have a bit of a unique model, but ultimately it makes sure that they win every time. And so you can apply to Y Combinator. They take about anywhere between 150 to 300 companies a year. The moment you get in, they'll give you $125,000 for 7% of your company upfront. So the moment you get in, they own 7% of your company, you get 125,000. You then enter the 3 month program. They give you mentorship, they introduce you to people, they help you develop your idea, and basically come out of the program. And then they offer to give you an additional $375,000 at whatever valuation you raise at. So if I leave Y Combinator and I raise around at $30 million, like our friends at Outrove, they'll get that 375 will convert at that 30 million. So they'll get their initial 7% plus whatever that 375 converts at,
Mm,
which in this case would be, call it 1.2,
okay,
1.5%. So in
so they get
total,
500,000
yeah,
from those
for
guys.
about between 7 and 10% of your company usually. So
Yeah.
they win. It's huge.
Yeah. Now, can you say how much money you invested in this go-to-market company and how much money they got from Y Combinator?
Yeah, so we gave them $300,000 at an $8 million valuation. So we got 3.75% of the company. I Combinator gave them the 125 at 7%. And then the 375 will convert at the 30 million, which they raised about yesterday. So Y Combinator will get a total of about 8.2, 8.5% of the
So,
company.
but how much did they get at the $30 million valuation?
So I don't think they've closed the round, but from when we were talking to them, they're getting about 1.5 million, and I think they want to raise about two. So two at 30, basically.
Okay. So, and you have to be a San Francisco area person. Like you have to be living there, right? In order to be
Yeah,
part of Y
absolutely.
Combinator, because you have to be able to go to their events. These are all
Exactly. Like,
in-person things, so you can't be
yeah,
remote or whatever.
yeah,
Um, if these companies are they're a handful. They typically for one of these AI companies, like this go-to-market company. What kind of go-to-market stuff do they do? Is that like cold email or what?
yeah. So it really depends on the business they're targeting, but that's exactly what it could be. And so it depends on what your go-to-market motion usually is, and it might be cold emailing. It might be how do we, produce go-to-market playbooks so you can enter the enterprise market. But yeah, typically for a lot of these businesses, it is very much a cold email pipeline, except what they help you do is target the right people. And so if we're sending out 1,000 or 20,000 emails, are we targeting the right people? Are we following up at the right times? Are you crafting your message in a way where it resonates? And how many different angles or ways are you hitting these people? And so it might be email, it might be LinkedIn, it might be how do we get you introduced to people? How do we build an enterprise go-to-market playbook for
Yeah.
you, except everything's
So
automated.
so what's different about these guys? What attracted you? Because there's tons of people doing that.
Yeah.
Like if you did
So
a search on Google, how many would pop up? Like 1,000? I don't know.
yeah.
There seem to
So
be
what
not there's no barriers to entry, right? Like
yeah,
anybody can start being a cold email consultant. So
I agree. And this will bring me, I think, to my point about in general, how do you differentiate in the AI space? Like
mhm.
we very much believe that products are highly replicable. The reason why we gave these guys money and the reason why we hope to give anyone money is because the founder is able to differentiate themselves and they can build what we call a distribution pipeline. And so in a world where the products are heavily commoditized, you win based off the founder. You win based off their ability to distribute this product. And so what they brought to us was basically very early traction. They had built partnerships with the right people. And so they had built a partnership with the founder of a company called Clay, a $3 billion company founded by an ex-McGill graduate, raised a ton of venture capital money, but they had basically partnered with him and they were also providing the technology that would be used by Clay in their backend. And so, similar to Clay, they had created a couple of partnerships with these very large Silicon Valley startups where they would both provide infrastructure, but then also leverage their networks to distribute their product. And so, for us, the way we saw it was you have an advantage in the distribution game. So, that was important for us. What we also saw was an 18-year-old founder who would somehow manage to even get in contact and sell his product to someone like the founder of Clay, who's got a $3 billion plus company. And so oftentimes you're betting on the founder and their ability to distribute. And then you hope that the product develops in the background, but we're not just taking a bet on the product itself. And so that's where the early stage game becomes a bit unique. You're not always betting on product differentiation, but you're betting on the person and their ability to distribute whatever product they build.
Okay. So that's what I saw on your website too, and I'm glad you brought that up. And is that a an investment thesis that's unique to Dragon Ventures, or is that common with VC funds?
Yeah. So I think a lot of people take the approach of, you're betting on the person as much as you're betting on the product. But I think we have tried to make it the very center of what we do. And I can go into more detail about, how we're executing on that. But our slogan is kind of in a world where AI means products are commoditized, distribution is the new moat. And so how do we effectively discover founders who are able to win that distribution game? And we look at it in two ways. Your distribution could be a product advantage, but what we say is it's short term. And so some people do have a product advantage, but we just assume that you'll have it for a few months, not a few years. Or we assume that you have a presence advantage. So you either have incredible founder market fit, you've been playing the game for 30 years, you have the connections and you can distribute. Or we assume that you're building in public, you've got a big following, hundreds of thousands of people follow you across different social media channels. And so you can basically acquire customers for free. But how are you winning either presence or product through distribution? And then can you build a company on top of that that becomes defensible? And so distribution is your moat, but defensibility is what we basically try to look for. And if we think you satisfy both, you become worthy of a check from us.
Hmm. So, and can can you just tell me quickly about Clay? What does Clay do?
So Clay is also like a go-to-market pipeline. And so if you're a company and you're trying to find leads, for example, they're basically the best in the game for helping you find curated leads based on what you're looking for.
Really? Okay.
Yeah.
I because I had heard of like Apollo
Yeah.
instantly.
Yeah.
Um, and it seems like anybody with the right skills can go out and scrape hundreds of millions, like 300 or 400 million contacts from LinkedIn. So LinkedIn has, I think they claim to have about 1 billion members. I don't know if that's true, but not everyone discloses their email address on LinkedIn. So I guess those are people you don't want to talk to anyway because they've decided to go into hiding. Um, I mean, if you're in business, don't you kind of want people to contact you if they have something useful to offer you? It's just like if you go into hiding, you're just sort of assuming that I will never ever need a new supplier. No one will ever offer me the same thing for less money. I will never be able to become more efficient. So kind of lazy people, I guess. But anyway, um, so I'm just thinking, you know, it'll be interesting to see how all of this plays out because uh, something that has occurred to me is that with a lot of these AI companies, large and small, particularly the bear startups, but even these larger ones like these, you know, if Chat GPT just keeps getting smarter and smarter and more able, they're now offering these, AI agent. So it says, ask me to do things for you. I can do things for you. So if you get to the point where I can just say to Chat GPT, I'd like you to build me a list of leads for my corporate law firm of, companies that have, say, 50 to 100 employees and, either revenue or they just raised a bunch of money so they can afford to pay their bills. And they will, and maybe I'll just get a list from them. I mean, doesn't that just from one day to the next put these other people out of business because ChatGPT has distribution?
Yeah. So, and they do that, and they have incredible distribution. But ChatGPT has basically trained a very large LLM, like a language learning model that they continuously train and input new data. The thing is, I think we're moving in a bit of a direction where you're beginning to get SLM, so small learning model, small language model. So a company like Clay is going to train a GPT of its own, but on a very hyper specialized data set. So OpenAI is trying to train its LLMs on a very large data set, that caters to everyday needs of any human being. But a company like Clay or a company like Apollo or any company looking to win in any space will begin to train their LLMs on very bespoke and very catered, tailored data sets. So I don't think the OpenAI wiping you out, you know, will apply to everyone. We're beginning to move towards a space where Clay will make its own agents. It's going to train its own data sets. And so OpenAI might come up with their own pipeline, but Clay can make one which is much superior because they're one completely focused on training it on that data set to complete a very specific task, whereas OpenAI is much more broad in its targeting and capabilities.
Hmm. I interviewed recently somebody from a company that is doing AI agents.
Yeah.
And I asked him, so do you have any programmers or anything like that? And he goes, no, we don't have any. So they're able to program their AI agents just with plain English, right? So are you coming across that in when you're talking to AI companies or looking at them? Like, does the company have to have some kind of proprietary IP that is coded, some kind of program, or not? Because I guess if you're really looking for distribution, this company has about 35 employees, and they're all distribution. Like the whole company is basically a marketing machine. They don't. So AI has basically, in their case, made the programmer not obsolete, but the programmer works for somebody else,
Yeah.
and they're taking that technology and then marketing it to all these different e-commerce companies, and they're able to just plug it into these all these other websites,
Yeah.
and it is
So
essentially a marketing machine. And I was thinking, well, that maybe that's exactly the sort of company you would be looking for then, if distribution is really number one.
agreed. So at a high level, completely agree. Like distribution is exactly what we look for. The only thing is what we would look for in that case is long term, how are you becoming defensible? So
Hmm.
if you're it's English to like if you don't need a programmer and you can code something using plain English, that's great. But my question would be, as you distribute your product, are you building in an embedded switching cost? Are you building a brand? Are you gaining trust with your customers? Because what I would look for is, can a customer switch from you tomorrow? And if they can't, well, that's great. I don't care how you build your product because if you can distribute your product and your customers love you, that's amazing. The only thing is, what I look for is to make sure that you're actually building something defensible. And so that's why for us, distribution is part one. And if you've ticked that box, that's great. But ultimately, we look for defensible companies. Can you build a venture scale company that customers don't want to leave? So I'm not sure about the specifics of the company you spoke to, but we do very, very deep customer analysis to figure out what is it that makes your product sticky, quote unquote. So that's kind of part two of what we look for to mitigate just giving money to any distributor.
Okay, so now you mentioned to me before, when we were having a chat about this, that you're looking at mostly AI companies and SaaS companies. Now, there's sort of two categories there in my mind, is that you've got some that are essentially consulting companies that charge by the hour, and others have proprietary um, uh, IP, some kind of proprietary software. So I'm assuming that you're looking for the ones that have something proprietary that is more scalable. Is that right?
Absolutely. Like, we look for what we call venture scale outcomes. And so the way we think of it is in VC, you have the power law. And so what you'd hope for is you want to make one investment that's going to return your entire fund. And so if we deploy a check of $300,000, you do it hoping that if everything else fails, apart from the one check you currently wrote, it can return your fund. And so for us, for $300,000 check, you need that to return you $15 million, which means you need a 50x return on your investment. And so when you look at any business, what we look to see is, can this business grow 50 to 100 times? Because if this is the only check that works and everything else fails, we need to return our fund and more. So that is how a lot of founders come to us, but my immediate reaction is, well, your market's too small. Even if everything goes well, you'll make me 5 times my money, except you making me 5 times my money isn't going to help because if everything else fails, That's only 10% of our fund. So any investment you make believing that if all goes well, this will return you 50 to 100 times. So I can basically return my entire fund, or I can double my entire fund in terms of returns.
Okay. I do have a podcast interview coming up, by the way, with another company, a startup company, that their thesis is that the existing go-to-market strategies with cold email outreach, etc., are outdated, and people are tired of it, and
Yeah.
they have an entirely new way of doing it. So it'll be interesting to see what they
Yeah.
have to say. Now, one of the things I wanted to ask you about was exiting. Okay, so do you give any thought to that at front? Because I mean, you're getting in at a really early stage. So what's your horizon here? How many, do you think you can exit in 5 years? Do you have that discussion with the founder? Do you ask them, where do you want to be in 5 years? How do you want to get out of this one day?
Yeah, absolutely. So as a small fund, it's actually something very important to think about. If you're a larger fund, you can afford to wait a very long time. You
Hmm.
can wait till the company IPOs and you can hold it if you'd like to, because you're a large fund, you've made your multi-billion dollar fund. We're a very small fund. So for us, it's very important to think that if something does go very well and we need to exit, how do we do it? So we turn to what's a very growing market, the secondaries market. A lot of people exit VC investments in the secondaries market. If we're a 3% shareholder of a company, oftentimes the market's quite liquid and it's very, very easy to exit through secondaries. And so in most of our term sheets, and even the term sheet we gave to the company Outro, we have a right of first refusal on any secondaries. And so if a secondary offer comes in, because we're the first check in, we'd like to have the right of first refusal where we have the option to leave in a secondaries if we'd like to, if we think it's high enough, if we think now is a time to leave because we want to distribute some money back to our LPs, we have the right to do so. So it's something, I'm glad you brought that up because it's something we think quite a lot about. How do we make sure that we can actually exit our investments in time
Mm.
um,
So
and make it
you're talking about like a private sale
exactly. Yeah,
while the company's still private, not waiting for an IPO or a
exactly. And we want
takeover.
to leave. Realistically, we'll get out pre-IPO.
Yeah. And so you're hoping what, in like within 3 years, maybe? Or
Depends on how it all goes, but about 5 year timeline.
yeah, something I'm involved in crowdfunding in the United States because I'm a Canadian and a U.S. Securities lawyer, among
Yeah,
other things. And they I think they still have it. Start Engine, which is one of the primary platforms, they actually have something so that once the company's stock is has been aged for a year, it can be resold under Rule 144, and they actually have sort of a bulletin board where people can then post their stock
okay.
and say, I want to sell my 1,000 shares, and
Yeah,
maybe hopefully the price has gone up, right?
yeah,
And
yeah.
and so if the company's not currently having any offering, people can then go and buy that. So there's so much private equity now. I'm wondering if there needs to be something like that, sort of like some sort of an OTC bulletin board where people can trade those things. So maybe there's an opportunity for a new company there one day. Okay, so now are you using AI to find companies to invest in, or like in this case, in your first case study, you had a personal contact who
Yeah.
introduced you, okay? And I'm in Vancouver. The way venture capital in Vancouver works is that you have to go bicycle riding with the people who manage the fund, and then they invest in your company. So if you're not their bicycle riding buddy, uh, they'll find something wrong with your company. Um, Now, and if you applied that, like I only invest in my friends' companies or whatever, or I invest alongside people, you would never have met this 18-year-old. You would never have invested in his
Yeah.
company, right? So,
Yeah.
you've got an open mind. You're willing to look at all these things. Are you going to use AI to find these companies, to filter them all out? Because there's thousands of them.
Yeah. So I mean, you could probably tell I'm pretty young guys. So we've taken a big Gen Z approach with our fund. Like we want to be a fund that builds in public. A part I didn't mention as much, but a lot of what we believe is a lot of people going forward are going to build in public. And what we mean by that is if you open up TikTok, I'm not sure if you're on TikTok, but you'll see a ton of these founders posting a day in my life or, come on a day with me as I try to build $1 billion company. And we've actually seen a lot of very successful people who have built in public because you end up building a following of 20,000 people. And now you've got maybe 5,000 free customers out of it. So we very much believe in social media storytelling as a way
Mm,
to basically, you know, get customers and build a following. And so not only are we trying to do it in social media too, but we're actually building an algorithm, AI based in the background, where we actually scour all of social media, collect data on anybody who talks about building in public, anybody who talks about building a company. We build a list of everyone, then we track them over a period of time. What's your engagement? How often do you post? What are you building? Do you have a website? Do you have customers? If we can get that information. And then if you end up getting an internal score by us, then we'll reach out to you. We'll have a chat with you and we'll see where it goes. And you might not be raising, you might be raising at that time, but we're using AI to build this pipeline in the background where we're basically targeting anybody and everyone who is building in social media or building in public, as we like to call it.
okay. So, um, actually, I don't have a TikTok account, and but maybe I should. I don't know. I thought that TikTok was really more for like the under 18 crowd, but you're saying that there are
Huge
people on
VC
there who are
market.
interested in venture capital and startup companies.
Yep. So there's a kid who dropped out of Columbia, began posting on TikTok. He raised $15 million from Andreessen a month ago.
Hmm.
And they basically said it's because he's winning in public. Like he's building this distribution brand.
Right.
His product is a consumer-based product. So he got a huge following on TikTok
Hmm.
of people who wanted to use the product. His engagement metrics were incredible, and he got $15 million from one of the biggest VC funds in the world.
Sure. And I think crowdfunding works like that too, where the VCs like to see you've got public support because one day they want an IPO,
So,
and you can't have a public market with
yeah,
only institutional investors. You need both.
yeah. So there's a company, good friends of ours, called Blossom Social. Um, if you've heard of them, so the founders are from Vancouver, but they built this platform where people can share their portfolios online, like their stock portfolio, talk about
Mm-hmm.
it, build a community out of it. But they decided, let's not go to VCs. Why don't we do an equity crowdfunding round? They raised, I think, $2 million in 6 hours or 8 hours. They got $2 million.
And did they do that on a crowdfunding platform in
I
Canada?
believe I believe it was Front Funder on yeah the platform. I
Okay,
can
and
double
that
check.
would have been their followers they reached out to then. Uh,
Exactly.
yeah,
Yep.
some of some success stories in the U.S. Canadian crowdfunding, not a lot of success stories. That's probably the
Yeah.
best one I've heard of.
Yeah.
But in the U.S., quite a few, and one I can think of, it was classified as a medical device because it's an app on a phone, but they had like 8 million downloads.
Really.
So you've got 8 million people's email address
Yeah.
and contact
Exactly.
information. They're already using your app,
Yeah.
so they think it's a good idea.
Yeah.
And they raised millions and millions. And the advantage is that the valuation you get is way higher.
Yep.
Okay, so you go to a venture capital guy and you might say, oh, I think your company's worth $2 million, or $3 million or whatever. And and they ask you, 64 questions, and you go to crowdfunding and they ask no questions or one or two questions, and you get a valuation of maybe 40 million or 50 million.
They believe in you because they use your product and they want to do well, so they'll give you money at really any valuation.
Yeah, and there's one that's done really well called Mode Mobile. I'm still trying to figure out exactly what it is that they do, but they have some kind of technology that allows you to make money off of your cell phone. So somehow you're letting them use your cell phone for something. I don't know what. You're just kind of like
Yeah.
renting out space on your cell phone. I don't really understand it, but they've had millions and millions of users, and then they've raised lots of money from crowdfunding. And they were allowing people to invest as little as $100. So and I think they've now just reserved a Nasdaq ticker symbol. So those are great. That's what I wanted to ask you. Now I remember AI and telephone apps. So I see all these different AI companies, and it's like, oh, we're gonna have AI for yoga studios, or AI for veterinarians, or AI for lawyers. Um, are you seeing AI telephone apps, like something I download onto my telephone that's going to do something with AI?
Yeah. So I see use cases for it. So we saw a company recently, like an AI doctor basically. So they have trained, again, they've trained an LLM
Hmm.
on health data, but millions of like data points basically. So you can open up the app. It's like a voice app on your phone.
Hmm.
I can talk to it like my doctor, and it's trained on huge amounts of medical data. So I
Hmm.
can say, hey, like I hurt my pinky, it's sore, but no bruising or whatever your symptoms are.
Hmm.
And because it's trained like a doctor, you can speak to it on your phone. It'll give you feedback, and if you need to, it'll say, okay, I can book you an appointment at the nearest clinic if you'd like to. Click here. You can click, it books the appointment for you because it's got all the integrations. Um, so they were going to begin to see a lot of that, like an AI assistant, for example. You start your day, hey, AI assistant, can you get me a reservation at this restaurant at 2 p.m.? Sure. And in the background, it'll get all that done for you. So I think we're beginning to see them, but I think the next big AI telephone apps will be like an AI assistant, for example. And I think we're waiting for a really good one to come out.
Yeah, something.
So
Um, be careful with the medical devices, okay? Because that's what that is. It's classified as a medical device,
yeah,
even though it's an app on the telephone. And you might recall at one point Apple was going to go big into medical apps,
yeah,
and I think they wound up the whole thing. Yeah. The problem was, like, for example, you'd get apps that say, well, we can take a picture of a suspicious lesion and tell you if it's skin cancer. Um, those are medical devices, and it's turning your phone into a medical device. So if you're diagnosing anything, giving people any kind of medical advice, um, the FDA, Health Canada, they'll say that's a medical device, which means that if it's say a class 2 medical device or a class 3 medical device, like if you're trying to diagnose cancer, they will say that's a class 3 medical device, and you have to apply for approval before
yeah,
you can sell it.
yeah,
So a lot of times these things that you see, they're actually from overseas. They're Eastern Europe or whatever. They haven't gone through that process.
yeah.
And if it's available on like on an Apple store or whatever, it's probably just a matter of time before it gets kicked off. Um, so I would be careful there, because then you get into the whole approval process,
And you don't
right?
want to be taking that risk. Like you don't want to give a company money before approval, hoping they get it. And
You know, maybe you do, right? Because that's also where you can make a lot of money. So but
yeah,
you have to know what you're doing. Okay, so you have to be an expert in that area. And the other thing is that for somebody like yourself who wants to exit within 3 years, good luck. Like, it's going to take 3 years to get at least 3 years to get the approval, and that's the inflection point, right? So people who are interested in that sort of thing, you want to invest before FDA approval, and then once you get the FDA approval, hopefully the price goes up 10 times, right? So But anyway, I think that that's a really uh, an underdeveloped area for these AI companies is figuring out how you can have an AI app that's going to be downloaded by 8 million people who you can then call on to invest in your company for your next round. So now, do you have any closing remarks before we wrap this conversation up?
Yeah, I think the only thing I'll say is like I encourage everyone to try to become more AI native. I know like people fearmonger by saying that AI is going to take over our jobs and everything. I don't think it will. I think I think the best use of AI is to basically help humans do even more. Like whatever your age or whatever point of life you're in, try to become a bit more familiar with AI because it could help you with things you don't even know. It can make your life a little easier. It could save you a bit more time. But I think we're beginning to enter a period of time where we're going to figure out the right balance between how AI and humans can coexist. And so a focus for my fund is how can we find the right products which will best help AI and humans coexist. But I encourage every individual to also figure out in their own life how can I begin to use AI in whatever form, to help basically make my life a little better, hopefully. I'd end there. Follow the fund, check out our progress. But Thomas, thank you for having me. This was awesome.
Well, thank you for coming on, and it's such a fascinating topic to talk about as well, and it's just
Yeah,
so world changing
absolutely.
this stuff. So I wish you the best of luck with your fund,
Thank you.
and we will be keeping an eye on it, and maybe follow up with you in like a year or two or three, and see if you've managed to
Yeah.
exit one of these things yet, and how
Okay.
all that's going. So, well,
Yeah.
thanks again for coming on, and. Thank you for everyone who's been watching. See you later. Bye for now.